Stop scrolling. Silver has just smashed $71 in Shanghai, and this is not normal price action. While Western markets are still trading paper contracts, physical silver in Asia is sending a warning signal. This move exposes a growing split between fake supply and real metal, and Western banks are starting to lose control. What you're seeing right now could be the first crack in the global silver pricing system. Stay with me, because this changes everything. Welcome to Silver News, your trusted source for gold, silver, and precious metals insights. From daily price updates to expert-backed investment strategies, we break down the bullion market so you can stay informed, protected, and ahead of the curve. Let's get started. For decades, silver prices have been managed, capped, and suppressed through paper markets in London and New York. Futures contracts, derivatives, and unbacked claims created the illusion of endless supply. But today, reality has finally collided with that illusion. Physical silver demand in Shanghai has pushed prices far beyond what Western exchanges are comfortable with, exposing a growing divide between paper silver and real, deliverable metal. Let's be very clear about why this matters. The Shanghai Futures Exchange is not driven by speculative paper contracts in the same way as COMEX or the LBMA. In Shanghai, physical delivery actually matters. When buyers demand silver, someone must provide the metal. And right now, that metal is becoming harder and harder to find. This $71 price is not just a number. It represents stress. It represents scarcity. And it represents a massive shift in power away from Western financial institutions that have dominated precious metals pricing for generations. What's happening behind the scenes is even more alarming. Industrial demand for silver is exploding. Solar panels, electric vehicles, AI infrastructure, military electronics, and advanced medical technologies all depend on silver. Unlike gold, silver is consumed. Once it's used, it's often gone forever. Recycling can't keep up. Mining output is stagnating, and global inventories are shrinking at a dangerous pace. China understands this. Asia understands this. That's why Shanghai buyers are willing to pay a premium for real silver, while Western markets continue to pretend supply is unlimited. The disconnect is becoming impossible to ignore. Western banks are now facing a nightmare scenario. Their entire silver pricing model depends on confidence in paper markets. If too many players start demanding physical delivery, the system breaks. And Shanghai's $71 silver price is effectively shouting to the world that physical silver is worth far more than paper promises. This is why panic is setting in. Banks don't panic because prices rise. They panic when control is lost. And control is exactly what's slipping away. We've seen this movie before, just not on this scale. In past silver rallies, prices were smashed down through aggressive selling, margin hikes, and coordinated interventions. But this time, the pressure isn't coming from retail traders or short-term speculators. It's coming from long-term industrial buyers, sovereign interests, and institutions that actually need the metal. Another critical factor most people are missing is currency instability. As global debt levels reach historic extremes and trust in fiat currencies weakens, tangible assets are becoming more attractive. Gold gets the headlines, but silver is where the stress shows up first because the market is much smaller and easier to break. When Shanghai silver hits $71 while Western prices lag behind, it sends a clear message. The dollar-based pricing system is no longer the final authority. Price discovery is shifting east. Western banks are trapped. If they allow prices to rise freely, massive short positions could implode, triggering losses that ripple through the financial system. If they suppress prices further, physical silver drains out of the system even faster. Either way, the outcome is the same: less control, more volatility, and rising fear. And this is happening at the worst possible time. Governments are running record deficits. Interest payments on debt are exploding. Central banks are cornered. They can't raise rates without breaking something, and they can't print endlessly without destroying purchasing power. In this environment, silver becomes more than a commodity. It becomes a pressure valve for the entire system. This is why you're not seeing wall-to-wall coverage of this event in mainstream financial media. A $71 silver price in Shanghai undermines decades of narrative control. It raises uncomfortable questions. Why is physical silver priced so much higher in Asia? Where is the metal? And who is exposed if this gap continues to widen? The answers are not reassuring for Western institutions. What happens next is critical. If the Shanghai premium holds or expands, arbitrage will drain physical silver from Western vaults. That metal will flow east, never to return. Paper contracts will continue trading, but fewer and fewer of them will be backed by real inventory. Confidence erodes quickly once that reality becomes obvious. We are approaching a moment where silver stops behaving like a manipulated financial asset and starts behaving like a scarce strategic resource. When that switch flips, price moves become violent, not gradual. Not orderly, violent. The $71 level may not be the end. It may be the beginning. For everyday people watching this unfold, the key takeaway is simple. Something fundamental is changing. This is not just about silver. It's about who sets prices, who controls resources, and who bears the cost when financial illusions collapse. Western banks losing control of silver pricing signals deeper problems across the system. It suggests that trust is breaking down, and when trust goes, markets don't adjust politely. They reprice brutally. History shows us that when precious metals break free from suppression, the move is fast and unforgiving. Those paying attention early understand what's happening. Those relying on outdated narratives are caught off guard. Thanks for watching Silver News. If you found value, hit the like button, subscribe, and turn on notifications. Stay informed, stay invested, and we'll see you in the next update on gold, silver, and the bullion markets.